Good afternoon, everyone, and welcome to Stock Market Today for Tuesday, February 25th. It's Alyssa Coram here, and the market downdraft continues, and growth stocks getting hit hard in particular. There are some areas of safety, but overall, we're playing defense right now. And here with me now to discuss today's action is my colleague, Ed Carson. Ed, what do you have for us today?
A couple of defensive growth stocks, Brown and Mastercard, as one speculative name, Hims and Hers, that did not have such a good day.
All right. Well, we will take a look at those stocks, but first, let's take a closer peek at those major indexes. The NASDAQ today down another 1.4% by the end of the day. We did manage to close off the lows, but still a pretty big hit there, percentage terms. The S&P 500, meanwhile, down 0.5% on today's session, also battling back to recoup some of those losses intraday. Also down on the day, small caps with the Russell down about 0.2% headed into the final minutes of trade, also coming off lows, but badly beaten down as we know. And then in positive territory today, there was the Dow up almost 0.4%. So trying to battle back after losing that 50-day line. But overall, Ed, the last couple of days, we have seen this shift to a more and more negative tone, and the NASDAQ undercutting and testing a number of key levels.
Yeah, it's the NASDAQ looks really poor, and of course, it's a really highly valued part that's sort of really hammered. But there was lots of others. There's lots of names like your Metas and your Amazons and others that are just sort of slowly falling. And while you can always look, hey, there's this and that, but they keep on. Okay, yeah, it's just sort of like that trend has been coming in there. So even names that aren't crashing have still, when you fall 5 or 6 days, that starts adding up. But obviously we're seeing a lot of damage. Defense has been trumping growth for quite a while. The past week has been really hard. It's definitely not a time to be getting excited about intraday bounces. There was,
Right.
like you say, we closed off lows, but we also didn't, we've sort of faded again into the close. Like there was moments, the S&P was almost at break even and might have even been at break even at one point, but it faded again. This is just not a time to be looking for one little uptick and saying, aha, let's go in, because the market really needs to prove itself, get above a lot of key levels, show real strength after some damage for the last week.
Yeah, it seems like we're more in a position where instead of using intraday bounces to buy, we're using intraday bounces to get a little bit better of a price when we're selling, you
I
know?
think that, yeah, that's probably definitely the sound strategy right now.
Yeah, but it was still, you don't know if you're going to get a bounce intraday, right? I mean, a couple of days ago, we closed at the dead lows there. So, but going back to the NASDAQ, and we'll analyze the S&P 500 as well, we now have closed below the lows from a couple of weeks ago on January 27th, and also the 3rd of February here, Ed, and getting close to the recent low in this digestion phase over the last 2 months from January 13th. So it seems like that's the next level on the downside for the NASDAQ.
Yeah, and it's the worst close, probably since sometime in November. So really, I mean, we've really round trip most of it. This is basically, that's the post-election day. We're like that's the gap up. So we haven't wiped out all the gains, but everything basically since that first day. So that's just a situation we're seeing right now. It's just a lot of things are under pressure. There's economic data that's not great. We have a slow growth, still high inflation, and a lot of uncertainty about policy. There's just a backdrop that's just not very favorable at the moment.
Yeah, and I think it goes to show you that there's money to be made in trending markets, but there was a big shot across the bow December 18th, right?
Yeah.
Not that we totally could have predicted, hey, we got to go to cash for the next 3 months. But you do need to heed those warning signs. And we've definitely seen them continue to pile up over time, even if you just look recently, right? Okay, we got back to highs, but day after day and underneath the surface, we've seen a lot of warning signs among leading stocks.
Yeah, a lot of expectation breakers, because there were some signs, hey, maybe we're finally out of this point. We aren't. And I guess
Mhm.
that one other thing is that if you simply capture most of a rally and avoid most of the bad. And again, you're not going to get right at the top. You're not going to get, but if you do that, even if your stock selection isn't that great, you're probably going to do pretty well if you capture most of the runs and avoid most of the outs. So this is a time to be fairly not very invested and just waiting for the times when things really are better.
Mhm. Yeah, and again, I say it all the time, but that's why I really love active investing because when times are good, you can really hit that accelerator and outperform. And maybe you get a little dinged up in the choppy markets, but
Yeah.
sidestepping when things really start getting tough out there, we are able to do that versus just the buy and hold mentality. If you're trying to stock pick, that can be pretty dangerous.
Yeah, so that is one of the best parts of active investing, that you do have to. Sometimes the best part of active investing is being inactive, is getting out and waiting for that opportunity.
Yeah. Well said. Okay, Ed, we'll have to see if the tide will turn here. But until then, we will be mostly waiting on the sidelines and holding healthy cash positions here. Okay, intraday, the S&P did undercut its low back from February 3rd, managed to close above it, but now testing some downside levels here as well.
Yeah, so it's nice to see it got a little bit of support, but really does need to show a lot of strength, from here.
So below the 50-day line, below 6,000. So on the upside, those are some of the levels in addition to the 21-day line that we want to watch. Okay, we know the Dow, it's only 30 stocks here, Ed, and this was only a fractional gain. We're still seeing, this short-term downtrend here. But what was behind the Dow's relative outperformance today?
I mean, we're seeing some defensive names like, Walmart was probably the biggest contributor. That was a big move. The only question is like they didn't have a great earnings report, but we're obviously seeing a move in defensive names. And there's some insurers, there's some other places that, even if they weren't great, were certainly better than a lot of the growth plays that we've seen. So, and I think Apple, a giant tech company, that's sort of become defensive. So I
Mm-hmm.
didn't do much. Down 8 cents
Didn't
is a
go
heck of a lot
down.
better
Yeah.
than, yeah, than some of the other names. So it's a more defensive, safer area right now. Though it's just hasn't out the Dow hasn't outperformed over time, but looking pretty
Right.
good today.
Yeah, and small caps still below the
Yeah.
200-day line and intraday undercutting lows from January. This is badly beaten here, Ed.
Yeah, and it wasn't looking that good a week ago, honestly. So when you get into
Mhm,
that situation, it was already, it's one thing if this were at highs and fell off, but this is below the 200-day line. It hasn't been below the 200-day line since late 2023. I mean, to closing below that level, it really hadn't closed. So it's just, and that relative strength line has just been abysmal for such a
mhm.
long time now. Yeah, just really not acting well at all.
Yeah. Okay, let's now have you take a look at RSP. So this is your average S&P 500 stock. Doesn't look like a whole lot of movement here today. So just a fractional gain it looks like here on the day, Ed, versus the S&P's decline of about a 0.5%.
Yeah, so more defensive, just less growth, less growth focused. So this is hanging in there, but it's not really doing anything. When you look at the last few months, it hasn't really gone anywhere
Mhm.
ultimately.
Right.
So I mean, you can go into defensive names, and some are working, but often just cash may be the safer way to go.
Yeah.
But
Yeah, and a clear range we'd like it to
yeah,
break out of. So we'll keep
absolutely.
an eye on that. Okay, a quick comparison of QQQ versus QQEW. Q's down 1.3% on the day, whereas QQEW down 0.8%. So not good, but definitely not as bad as the NASDAQ 100. So clearly it seems like those mega cap tech names. Here's the FNGS ETF, which represents a lot of the Magnificent Seven type names, down 1.6% on the day, Ed.
Yeah, so some of those names not as heavily weighted, and QQEW is still holding the 50-day line, so that's definitely a positive.
Way to be cup half full, Ed.
Yeah, that's just me. That's just
That's
me.
so you. Okay, let's also go to FFTY because you talked about growth. So even with closing basically mid-range, it looks like on the day, FFTY representative of growth stocks down 2.8% on the day. So that's not too good.
No, and when if this were a weekly, I mean, it's obviously this is 2 days, but it's like if you just sort of think about the range from the past 6 days, it is right at the lows essentially. I mean, I know it bounced a little bit today, but when you think about
Mhm.
such a drop, that is just an enormous drop. And we've seen that with so many of these really high flying names. I mean, there's some really big gains, and some of the best winners from last year are just getting crushed. And that's what FFTY is showing.
Mhm. So now we've seen 2 days where there's an attempted comeback,
Yeah,
right? There's an attempt at some reversals here, but we definitely want this to develop into something more on the
yeah,
upside to really see a change in trend here.
absolutely.
Okay. Well, let's take a look at Bros. You mentioned insurance as a standout area. And we've been covering a lot of insurance stocks on this show, which, it's not the most exciting area, but this is a stock breaking out today, and that RS line is hitting a new high.
Yeah, so this has been doing very well. The growth has been picking up. It's supposed to slow down again. I think there was these massive increases in rates, and that's helped a lot of the insurance industry. That may slow down a little bit, but still solid. And it just feels in this kind of environment, defensive and defensive growth names doing well. And the real strengths at a high, and that's after there was a prior uptrend from after the prior couple of bases. So this has actually done okay. It's not been like wow, but there was an uptrend,
Hmm.
even before. So I think the question is, I mean, this is something that might hold up if growth suddenly turns around. I mean, this is not like a
Right.
2% growing company. So, but it's just a question, how much do you want to play in that? Because you never know when something bad will happen that'll hit some name like this, or if either the market gets so bad that everything falls, or the market gets so risk on that this lags. So how nimble, again, not saying you can't play an insurer or discount retailer or something like that, but it's just how much do you want to play given that
Exactly.
this may be temporary.
Right. And the teams talked a lot about how it's good to be picky. And so, it just depends on your strategy, right? If you feel like this is in your wheelhouse, then go for it. But for someone like me, hey, the market trend's not in my favor. This is
Yeah.
not really something I can get excited about for holding for a big move. As if the switch flips, I'll probably get shaken out of this, at the
Yeah.
first sign of weakness. So weak hands over here when it comes to insurance stocks.
It's
All
important to
right.
have conviction. Yeah. And if you don't
Yeah.
have it, it just makes it tough.
Mhm. Okay, let's talk about Mastercard. Looking like it's showing some really nice tight action, outperformance, not only over the last couple of weeks, but the last couple of months as well here, Ed.
Yeah, this is one that has not really outperformed, except for it has in the last few months. But the growth has been pretty solid. You look over there, and those are pretty solid numbers overall, and it's been for the last few years. You get these, solid double-digit gains. So the earnings and revenue are sort of suggest like, and the stability of it suggests like a long-term leader, but this hasn't acted like that. So it's possible this will take on that thing. And okay, so right here, very tight action. I believe this was added to Swing Trader today as sort of rebounded from the 21-day line. I think if you got above the bulk of that tight action, you can sort of see how most of it we was trading there. Is that probably not too long. If it can hold steady, it could be a flat base, and a flat base that's fairly tight like this. I mean, today was almost a little shakeout, but it's like it could be very. I mean, you can see how that RS line has really, really improved the last few days, even as the stock is probably flat over the last 3 or 4 days. But this is showing strong action. Definitely want to watch. You can see the acceleration too on the revenue side. So there's definitely some positives here. Again, consumers might be an issue, but as long as people are buying things, it's like that they care about the number of transactions, not the profitability of things. And so they're a little bit insulated from that. I don't. They're not certainly
Mhm.
protected from it, but there's reasons why this one is a really solid defensive growth play.
Yeah. Well, compelling action here today, no doubt. And for those who do want to take a shot, perhaps with a smaller position size, looking at the reversal day low as your area to get out if you're wrong. So, reasonable risk profile here with something like this. Okay, let's go to hymns. What a wild one. Down about 27% by day's end, 22% rather, it looks like. So off the lows here, Ed. But what a round trip.
What a round trip. And that's the thing. You want to be one problem with a round trip is waiting for the stock to round trip. And you really wouldn't have wanted to do it where this was like 100% or close to it by
Mhm,
the time it peaked there. Is that stocks will bounce off the buy point or the 50-day line, that kind of thing. So you want to, I think that maybe on Friday, if you hadn't sold, that would have been a day to
mhm,
sell, like, just because that was clearly coming down. And it's not just this stock, but the earnings are coming up and so
mhm,
many other stocks were coming down. It's like the risk of something like what happened today was very much there. I mean, I know the next day it bounced. I think you also could have sold on Monday. Yes, certainly intraday. Like I understand that it rebounded, but you could have either sold because it was breaking below and you just don't know where it's going to end that day, or you took the bounce and say, I'm getting out of here before earnings. Again,
mhm.
could this have come up? There are some stocks even now that have rebounded, but you just don't know. It just seems like this is just not the environment to be heading into earnings on enormously highly valued companies, especially one where there's questions about the business. Like there's questions about the bulk of this huge run up is basically selling these weight loss drugs, and they may not be able to do so much going forward. And so that's a big uncertainty. I just think that there were opportunities to at least take partial profits,
Yeah.
and you just have to. You cannot be in an environment situation where you let 100% gain or
Mhm.
something close to it go to zero in
Right.
4 days. You know, uh, you just have to be able to take some action on that.
Mhm.
So, we'll
Totally
see from
agree.
here, but yeah.
Yeah. But I mean, going from what was this high here? A high of 72 a couple of days ago to today, a low of 36. I mean, that's a pretty big haircut there. Seems like it's gonna need some time to set up again because those are some pretty big swings.
Yeah.
Okay, moving on. Let's take a look at some stocks with earnings out after the bell. What a wild ride for Axon. Broke out, major blow up, breakout failure on an analyst downgrade here heading into the report. A terrible weekly decline last week. It is up the initial reaction 12%, but it's hard to think about wanting to do something with this, even if tomorrow it has a 12% plus gain.
Yeah, where is it? It's in the middle of nowhere. It's this was horrible. This is about as ugly of a failure as I can remember, because it was such a classic breakout and then immediately fail in such obvious fashion. There were plenty of opportunities to get out, at least with a small loss or a modest loss or just a big loss before today. And so up 12%. I mean, what? I mean,
Mhm.
it's a long way for anybody who bought on the breakout.
Right.
I mean, that would be a really big rally, and that may take months, even if things go positive. And this is just right now.
Yeah. And as we've talked about with IBD chief market strategist, one way to look at some stocks is with a 50% retracement. So, for starters, okay, can it recover 50% of this range and then set up again?
Yeah.
That might help prove itself a little bit more. But that was a pretty nasty tumble. Uh, but again, up 12%. We'll have to see what happens tomorrow and if it can get on the road to recovery here. Kava, another growth name, beaten down heading into this report, and doesn't look like the reaction favorable here, Ed. I'm seeing shares down 7% with the initial reaction, but it did trigger some sell signals heading into this report. So
Yeah.
hopefully folks weren't caught in this.
Yeah. And it missed views on EPS. It looks like, and maybe just barely beat on sales. I don't know about other things that's going on, but obviously yeah, a lot of trouble.
Mhm.
Coupang is a positive nine
Right. And I don't know if
stock.
I verbally mentioned that we're looking at Kava here, just for our
Oh,
Spotify listeners.
yes.
Kava down 6%. Maybe I did, but down about 6% or so. You wanted to take a look at Coupang,
Yeah.
CPNG.
And this was our stock of the day, and we didn't say people should be buying it because this is earnings after the close. But right now, it's up about 4%. That's a handle after today. It was already a handle on a weekly, but so we'll see how things go. That was a positive there.
Yeah, so that could
And
be interesting come tomorrow. We'll take a look at it during IBD Live.
absolutely, another name that's not doing so well is Instacart, ticker Cart,
Mm,
and this had fallen back toward the buy point. Yeah, it bounced off the lows today, but again, probably a 10% gain or something close to it was essentially zero intraday today, and you're heading into earnings again.
Yeah.
maybe what, so you just have to, there's no cushion. And I'm just trying to think if there's anything else that was
Oklo?
really moving. Oklo wasn't doing a whole lot. I don't know if that's
Okay.
reported
Not
yet.
out yet.
Workday, this is interesting because Workday actually already
Mm,
pre-announced, and they sort of tried to
right.
break out on that news like a couple weeks ago. I think when it got up to
Okay.
283 like that. Yeah, I think that's when it pre-announced, right in that area. Then it, came back down with the market, bouncing again today. So that's, if nothing else, that's a software name. We're going to get some more. In addition to NVIDIA, we'll also get Salesforce. We'll also get Snowflake. So tomorrow is a really important day for software in addition. So nice to see Workday come up, since
Mhm.
that one's actually holding up reasonably well. And I mean, very loosely,
You're being
very
nice.
loosely. It's,
RS of 49.
yeah,
Yeah.
it's not, maybe they're working a half day. Okay, let's
There
but it's just, yeah, and so that's part of it. It hasn't really outperformed in a while.
yeah. All right, well, we'll see. Maybe it can, change get a little momentum shift, with the earnings tomorrow. We'll have to earnings reaction, that is, and its, first full day of trading after the results come tomorrow. All right. Well, as always, thank you, Ed. We appreciate it.
Thank you very much.
And thanks everyone for tuning in. That is it from us for today. But it's Tuesday, so we've got our Swing Trader Scorecard show coming up live at 5 p.m. Eastern with our very own Mike Webster and Justin Nielsen. So I'm sure they'll have a lot to discuss about the market from a swing trading perspective and setups that they're watching. One that we looked at on the show here today. So you can check that out at 5 p.m. on our YouTube channel. And we have IBD Live coming up tomorrow morning, investors.com/IBD Live for all of those details on our daily morning live stream starting 10 minutes before the opening bell. We'll see you there. And then we'll also see you right back here tomorrow after the close.